following is a paid program and does not necessarily reflect the views of WSIC.
Hello and welcome to Dollars and Cents, presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here in the 4 o'clock hour. You got 53 minutes and 40 seconds until you get to the 5 o'clock bell, and I appreciate so much if you're a 9 to 5er spending that time with us here as you get to the end of your workday, as we're giving attention to all things financial, economic, talking about what's happening around us here. We got a lot of news. You know that it just might be that time of the year. Gosh, I feel like it's always that time of the year when we're talking about these things that are happening in the markets, in your financial lives, wanting to make sure that what we're bringing to you here pertinent and helpful for your particular space. But in doing so, you recognize and you remember, as a previous listener to Dollars and Cents, that nothing that we're talking about here is intended as a specific recommendation for you. Meaning that even though we're going to be talking about a number of different, we're going to do it today. I'm going to warn you in advance. We're going to talk about companies. We're going to talk about things in sometimes a positive light, sometimes a negative light. Again, in doing so, that nothing is intended as a specific recommendation for you. We strongly, strongly recommend you reach out to your tax advisor, your financial advisor, or if you'd like to reach out to us, North Main Financial Group, love to hear from you. Love to chat about your particular financial situation, see if there are ways in which we might be able to be helpful to you. Online, you can find us at northmainfinancial.com. That's north like the direction, main like the street, financial.com. We have a contact page on there. You can leave us an email address and a phone number. Let us know the most preferred and desirable ways for us to contact you, again, at northmainfinancial.com. If you'd like to call us here in the studio, love to hear from you here in the studio. Absolutely. Can't promise you we're going to get to your particular subject because got a lot. I mean, if you would look at my hit sheet here for the for the hour, I mean, you would look at it and say that's a little bit crazy. And I agree with you. It's probably a little bit crazy in terms of the number of things that we want to touch on. But if there is a particular subject, something that's come across your radar screen, perhaps even a conversation you were having with a friend, a colleague, kinds of things you want us to include on this show, love to hear from you. I promise we'll get it on here. May not be this show, maybe the next show, but I promise you we'll get it on here. Call us here in the studio, 844-STUDIO-4. That's 844-788-3464, 844-788-3464 here in the studio. Love to chat about it. Love to help you with that. All right, let's get going here. What's hot? What's hot? In my world, all of it's hot, right? There are very few things that we're talking about here where I say, oh, that's really not that big of a deal. No. It's on fire. Is lit still a thing, Producer Bill? I mean, if we call things lit, is that still in the vernacular of all things hip?
As far as I know.
I mean, I'm leaning on you here.
Yeah.
Because, okay.
Absolutely. I think we're in the clear there.
We're good. Okay. So so we're lit. Well, the things we're talking about
Yes.
are lit. Let's say that according to my my young daughters, I am probably the opposite of that, but that's all right. We're going to hit some things here that certainly are. Let's talk a big one. In terms of the consumer experience, hard to think of something that would be less impactful. And even if you're not one who has bought one, used one kind of thing, it would be hard to find something that is, let's say, more broadly impactful on our day-to-day lives. And even if you use the other one, you'll understand what I'm talking about here in a second. Even if you use the other one, it's a dichotomy at this point. Have to talk about Apple. Have to talk about iPhone 16. Now, for those of us who may remember with great clarity when iPhone came out. No, not iPhone 1. It was just iPhone at that time. It was just iPhone. The first one, no, really. I mean, really do remember when the first one came out there. And now here we are at iPhone 16. My goodness. Now, Producer Bill, are you an iPhone guy? Or are you an Android guy? Tell me where you are.
I am an iPhone guy.
Okay, see, I am too.
I don't know if it was just because that's what I was given. I haven't ventured to the other side, though.
You know, and that's literally where I am.
Right.
It's probably just due to comfort that I haven't done anything different at this point. And, of course, that's exactly what Apple wants us to do. They want us to say, well, I'm pretty comfortable here, and I know a little bit how this infrastructure works, and I'm into iTunes, and I'm into
They got me. Yeah.
I mean, there's no going back at this point. Anyhow, iPhone 16 coming out here. The real big news on this, or let's I can't. Okay, I'll call it news. I would even say nuance, because for someone like me who is not maybe as technologically adept as so many of you probably are, but this is the first one. This is the first iPhone which has come out, which is uniquely structured for the AI universe. Truly it is. And they even call it, they put a name to it. The first time I've heard it, may not be the first time that it's out there, Apple Intelligence. Now, if you've listened to this, you listen to Good Morning LKN here on WSIC, which, by the way, Monday to Friday, 9 to 11. Make sure you tune into those guys. Love listening to them. Lots of good stuff, lots of good content on there, as well as a little bit of a smile and a chuckle as you're getting into the start of your day. But they were talking about it as well in terms of what is a part of this iPhone 16, and it is. It's this Apple Intelligence. And again, I've never been comfortable. Now I'm going to say this as an Apple user for many, many years. I've never been comfortable with Siri. I shouldn't even say that. I say it over the airwaves here. Probably all of your phones are literally right now asking you what you want. That's probably not a good thing to do. Maybe I'll call it Larry. Would that be all right? So that's relatively close in terms of the tone of things there. I mean, it is amazing the kinds of things that it can do. And maybe as the Chief Justice said, maybe it's always been listening to what we've been saying and doing all along, and they're just now telling us what's happening here. It's real. We're getting closer to Halloween, and we got to be thinking about these kinds of things, right? I mean, we're within 6 weeks of Halloween, so that means it's Halloween season, and it's unbelievable. I mean, the kinds of things that it will search through on your calendar, in terms of what it will search through on your phone, and unfortunately, the kinds of things it's probably searching through relative to the words that you're saying, even if you don't want it to record. I intentionally made that very garbled so that Larry didn't hear what I was saying there. It's very real. It is amazing, the kinds of technological advances. So I'm not meaning to speak down to Apple. By the way, publicly traded company, one of the largest ones in the world, AAPL, Alpha Paul Larry is the ticker symbol. Not a recommendation to buy, sell, or hold Apple stock. Unbelievable. I mean, just unbelievable. Whether you're an Android person or an Apple person when it comes to this kind of thing, just unbelievable in terms of the technological capabilities. One of the biggest things, and I think this was economically genius on the part of Apple. These phones are not cheap. I mean, if you look at the actual cost on them, the ones that I looked at were between $799 and $1,199, so $800 to $1,200 for these particular units, these new ones that are coming out, this iPhone 16, depending upon the size of the screen and the capability of the chip that you're buying. Unbelievable in terms of their capability. And then what they did is they said, no, you don't have to pay for it all up front. We're actually going to spread those payments out over a couple of years. And as Mamie said here this morning on Good Morning LKN, not even 2 years now, we'll spread it out over 3 years. My gosh, I feel like I'm buying a car now. It's unbelievable. But what they're wanting to do, and this is genius from a marketing standpoint and also from an affordability standpoint, they're wanting to make it accessible to the widest portion of the market that they can. If you say, you know what, you need to pay $1,200 up front, you're going to cut down your market. You really are. And Apple figured that out. They said, you know what, just relative to the plan and the price and your carrier, whether it's Verizon or whether it's T-Mobile, whatever it may be, we're actually going to make that a part of the overall cost. And then after a couple of years, we're going to let you trade it in. Amazing stuff. Apple knows what it's doing. Appreciate it so much, folks, you hanging with us here on Dollars and Cents presented by North Main Financial. We're going to take a few seconds here to hear from our sponsors. Appreciate it so much hanging with us. Coming back soon here on WSIC.
Dollars and Cents with your host, certified financial planner Joshua Dobi, continues straight ahead on 105.9, 100.7 WSIC.
The clouds continue to thicken up as we work through the rest of our Thursday evening, especially once we get into the overnight hours with a sprinkle or a stray shower possible. We'll fall down into the low to mid-60s in the overnight hours for our Friday. It's a mostly cloudy day. Not to say there couldn't be a few peaks of sun here and there, but do bank on the occasional shower from time to time and scattered showers possible heading into our Saturday. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Listen, save, enjoy. The WSIC app, available now in your app store.
Here is your WSIC community calendar. Langtree Live in Mooresville presents Fortune 5 in concert on Thursday, September 12th. Fortune 5 won the Battle of the Bands this past spring and now makes their debut on the Langtree stage. Event time is 6:30 p.m. with music powered by Waves Entertainment starting at 7. Grab your friends, family, and lawn chairs. Enjoy the shopping and dining options while at Langtree. Don't miss the music of Fortune 5 this Thursday at Langtree Live. This Friday is the next edition of the Piedmont Healthcare Friday After 5 concert series. Downtown Statesville offers free entertainment to residents, neighbors, and visitors. This week's concert features the Camel City Yacht Club, 5 musicians devoted to bringing the finest smooth rock of the 70s and 80s to you. Friday After 5 is held in downtown Statesville on West Broad Street in front of Mitchell Community College from 6 p.m. to 8:30. Beer, wine, soft drinks, and food will be available for purchase beginning at 5 p.m. Bring your chairs and enjoy a night of music this Friday in downtown Statesville. The WSIC gang is back at Micaiah's in Mooresville for Trivia Night Tuesday, September 17th. Grab your squad, form your team, or come play solo and join WSIC on-air personalities as we gather for a fun game of trivia. We'll see you September 17th at Micaiah's in Mooresville. The NHRA returns to ZMAX Dragway September 20th through the 22nd for the Carolina Nationals. When the temperature cools down, the excitement heats up at the Bellagio of drag strips. Every ticket is a pit pass, giving fans unmatched access to the drivers and crews who power the NHRA's thunderous 11,000 horsepower machines to their limits. Visit CharlotteMotorspeedway.com for information, tickets, and details. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
It's Dollars and Cents with certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here into the second quarter football reference. It's football season, folks. You know, you listen to Dollars and Cents, you're going to get a lot of that. You're going to get a lot of football and food alliteration there. I mean, Producer Bill, I have to say now that we are 1 week officially into the NFL season, and we had an opportunity to have our Carolina Panthers on the field for this past week. Got a long way. It's early. It's early. It's early.
It is early.
It's because I'm not going to say the score on the air.
No, please don't.
I would like to say that our Panthers came up a little short.
Yes, I like the way you put that.
And a little short this past week. A lot of chance to rebound. A lot of chance to continue to qualify not only for the playoffs but also to be a participant in the Super Bowl this year.
That's it.
We are
right there with the Ravens.
Okay, I would put them right there with the Baltimore Ravens on so many levels, but in terms of the record, point made.
Yeah, one data point there. And that's a slippery slope.
It's a slippery slope. Always what it is when you look at one data point here. Sorry. If you are a football fan, you come to the right place. And if you're a financial fan, you're coming to the right place here as well, as we're talking about all things here on Dollars and Cents about that. And football is a big business. I was having a conversation here just before I leave the football end of things too quickly. Having a conversation, actually looking at college football here this season. And you think this has nothing to do financially, economically? It absolutely does. Talking to somebody who's big college football fan, talking about the whole NIL end of things, name, image, likeness end of things. Not going to get into the granularity about where things are pro or against that end of things right now, but just talking about just how that has transformed the sport. And I think this is public information. If you Google me, I mean, you don't have to take my word for it. I believe this is public information. That the NIL disbursement, and I'm not picking on them. I'm not a Michigan fan before somebody calls me and tells me that. But looking at the Ohio State Buckeyes first string. So there's not the folks, because there are people who are on the second and third string making NIL money as well. If you don't believe me, Google me on that as well. But looking at the first string for the Ohio State Buckeyes this year, $20 million worth of NIL money. $20 million. That just, when I heard that, and I did a quick check, I did a quick Google brush on that, I think that's correct. I mean, check me if I'm wrong. Call me in here, 844-STUDIO-4, 844-788-34. I mean, holy smoke. Producer Bill, I didn't even know how many digits were in 20 million when I was in college.
Right.
I mean, I seriously didn't. I mean, we didn't get that far in math with what
right there with you.
I mean, with what we were doing. Holy mackerel. Now I say that, and before I want to get too carried away on those numbers, I have to put them in some context and perspective. When I'm looking at the television contracts that are signed by the Big Ten and when they're signed by the ACC and are signed by the SEC, why not? Why not have that kind of amount? Again, you can agree, disagree with me. I'm just looking at it in context of the number of dollars involved. It's not like this $20 million just came out of thin air. This money was already floating in the machine, and it just now happens to be directed towards some of the players. And just amazing in terms of the economic impact. And I know, I mean, there's some pretty heated thoughts on all sides with regards to NIL and whether it's right to pay college athletes, not pay college athletes. I'm not getting into that. I'm just talking numbers here, folks. Unbelievable the number of dollars involved. Because again, you looked at it, 5 years ago, 6 years ago, that kind of money going to college players was literally illegal. Let me say it this way. Any money going to college athletes was illegal at that time. So it wasn't like, well, you get $1,000, it's okay, but if you get $100,000, not. No, it was comprehensible. You couldn't even get tickets to go see a concert without violating the NCAA. Amazing kind of movements that we've had here in the last several years. And again, from a financial impact standpoint, what's that going to mean? What's that going to mean for college athletics? I do have some concerns, but I have some significant concerns about what it means for college athletics with colleges and universities which don't have the financial wherewithal to be able to compete with that. Because you look at Ohio State and $20 million, okay, they make out a couple of calls to, and I mean this quite literally, they make a couple of calls to some of their big donors, they cover it off. For 98.9% of the other colleges and universities in this country, that's a structural impossibility. There's no way that they're going to be able to raise that kind of money, pay that kind of NIL money. So what if they have a good player and they get a call from Columbus, Ohio? Very hard to compete with that. Very hard to compete with that. It's going to be very interesting to see that. I had this conversation just before I came on air here. What does that look like then? What does it look like over the next 4, 6, 8, 10 years with regards to how college athletics overall look? What does it mean for those smaller colleges? I have this conversation with some of our local colleges and universities. It's very, very hard to compete in the portal right now. Very hard to compete. Because where do you go? If you have somebody who has some exceptional skill and they think they may be able to trade up, why wouldn't you? Why wouldn't you do that with an opportunity not only to play for a larger team, bigger team, larger exposure, but also be able to do it for some cash money through the NIL end of things? Very, very interesting as far as that's concerned. All right, let's keep going. What's hot? That's hot. I mean, my goodness. I mean, I think about it now for my exceptionally, incredibly, very, very modest sports career in college. I think about, well, maybe I could have made $22. Or maybe $122. Who knows? I mean, you never know. I mean, it's not just the first stringers here. I mean, we're talking about the possibility for the second and third stringers that may have been able to make $1 or $2. I mean, everything was going to college tuition anyhow. I mean, I would have been very willing to take that, right? To put it towards just like I did with my bag of quarters every month to take down the registrar's office. Let's keep going here. All right, all things hot on here on Dollars and Cents. We're going to talk food. We're going to do that. Now, Producer Bill, I came across one here, not familiar with it. Well, I'm not familiar with part of it. Burger Fi. Burger F-I. Familiar with it? See,
No, I am not.
See, I am not as well. It says they have 162 locations between the Northeast and the Southeast. Not familiar with them. Now, they do have another one where I have been to one previously in the same group, Anthony's Coal-Fired Pizza and Wings. Not sure if that was...
It's not ringing a bell.
Not ringing a bell for you either. Well,
there's more out there for me then.
Yeah, well, well, it may or may not be. They filed Chapter 11 bankruptcy.
Oh, okay.
So it may actually, those locations are going to be diminished significantly here, probably over the next several months. The very interesting, in terms of how they came to market from a public standpoint, very interesting because this was very, very hot, I would say 3, 4, 5 years ago, with what were called SPACs. That's an acronym, SPAC, Special Purpose Acquisition Company. Not going to get into the granularity of it. What it really allowed for were companies that were having a challenging time coming to market in the public markets to be able to get to market. All right, take my word on it on that. You want to do some more due diligence on it, you're certainly welcome to do that. Not going to vacuum up our time here on Dollars and Cents today with how SPACs go together. But what it really allowed for were some companies that probably prima facie were not going to be able to get to market. But if you put them in a SPAC, basically, let's call it a covering, a raincoat, however you want to look at it, we're able to get to market through these special purpose acquisition companies. And so that's how they came to market here in 2020. Unfortunately, didn't do very well. And they're going to need to go into Chapter 11. Now, Chapter 11 is really reorganization. Chapter 7 is liquidation. Not going to get into the real deep depths of bankruptcy law here on Dollars and Cents today, but Chapter 11 really allows for reorganization possibility. I mean, one of the ones that's happened here recently, and we talked about it because they're so ubiquitous, certainly here in the U.S., is Red Lobster. And Red Lobster went into Chapter 11 specifically for reorganization, probably for some means of reducing the intensity of the debt obligations on the company. And there was very quickly, actually, a group that came forward, a buying group that came forward and is going to want to bring them out of bankruptcy. Now, with fewer locations, smaller menu, lower overhead, they're going to do all those kinds of things as well. But very, very interesting. Now, I went and took a look as I was looking at BurgerFi and Anthony's Coal-Fired Pizza and Wings here. Like I said, Anthony's was the one that I had heard about. I think I visited previously, but just wanted to take a look at, okay, who's hit Chapter 11 here in the restaurant business? Because we love all things food here on Dollars and Cents. Number of them. So, I mean, I put a quick list of 10 together on some of the ones that may be on your radar screen. As I mentioned, Red Lobster is one of them. Buca di Beppo, that was certainly on my radar screen. They did the family-style Italian food. Producer Bill, I don't know if you ever tried. I mean,
but that's the best name I've heard.
I mean, they did family-style portions. It was I'm not surprised they're in Chapter 11. Right. I mean, seriously, because their family-style portions were outrageous. I mean, everything from the salad to the dessert. I mean, it was amazing. So, roti, also a Mediterranean-style Italian food kind of, and this one of my favorite. This next one of my favorite names for a restaurant ever, World of Beer. I mean that. I mean that nothing more needs to be said.
I have been there.
Oh, see, I didn't know you had been. Unfortunately, Chapter 11 as well.
Yeah.
I mean, yeah. Rubio's, Melt Bar and Grill, Kuma's Corner, Tijuana Flats, Sticky Fingers, Boxer Ramen. And I do like some ramen, especially late at night after I haven't eaten most of the day. Mm-hmm. I don't mind having a bowl of ramen. Unfortunately, all of these have gone into Chapter 11 here in calendar year 2024. Now, this is not unusual. I don't want to say that this is something very different or hasn't happened previously. Definitely not saying that. But in terms of just understanding how very, very difficult it is to be in the restaurant business, and then B, this is what we'll be talking about here in the second half of today's Dollars and Cents show. What does that mean for the consumer? Is the consumer slowing down? What does that mean for the restaurants that are in business and that are thriving? Where are those in terms of where the consumer is spending? It's a very, very important question, certainly with regards to where we are as an economy and then where the consumer feels confidence in spending their money. Because we've talked about it. Prices are going up, whether we're looking at mortgages, whether we're looking at rents, whether we're looking at going to the grocery store, the gas station, all of those kinds of places are putting a crimp on the spending power of the consumer. Consumer, 2/3, 3/4 of our economy overall, very, very important about how their confidence is and in terms of where they're looking to spend. So we'll be talking about that in the second half here as we get into the later portion of this week's Dollars and Cents show. But before that, we're going to hear from our sponsors. I appreciate you hanging with us here. We're going to hear from them for just a few moments here, but hang with us here on WSIC.
There's more of Dollars and Cents with certified financial planner Joshua Dobi on the way from 105.9 100.7 WSIC.
The clouds continue to thicken up as we work through the rest of our Thursday evening, especially once we get into the overnight hours with a sprinkle or a stray shower possible. We'll fall down into the low and mid-60s in the overnight hours for our Friday. It's a mostly cloudy day. Not to say there couldn't be a few peaks of sun here and there, but do bank on the occasional shower from time to time and scattered showers possible heading into our Saturday. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Prioritizing your health is one of the best ways to take care of yourself. From routine visits to the joys of pregnancy to the illnesses that stop you in your tracks, Iredell Health System will be by your side. Learn more at iredellhealth.org.
Hi, this is Bob McIntosh with the McIntosh Law Firm in Davidson. Since 1997, we have been committed to providing our clients with competent, caring, and experienced legal services. Learn more at McIntoshLawFirm.com.
This is Fred Lowry at Lowry Drug. We now have our own brand of full-spectrum hemp extract, also known as CBD oil. I personally manage this product as it was grown on my farm here in Iredell County. It was then processed and bottled here in Statesville. This is a true herbal extract with all the medicinal components intact. A product you can trust to be authentic. And since there is no wholesaler, it's at a price you can afford. Try it at Lowry Drug on Hartness Road in Statesville.
On the lot at Black Automotive. Look at these Buick Envistas. The all-new Buick Envistas are leasing for as low as $299 a month. Check with them here at Black Automotive for all the details. Black Automotive, Statesville.
Mom, meet Sarah.
From first-time Nana moments.
And welcome to Flight 101.
To annual girls trip moments. Your can't-miss moments are worth protecting against RSV. If you're 75 or older or 60 plus with a chronic condition like asthma, COPD, heart disease, or severe diabetes, you're at higher risk of landing in the hospital from RSV. And there are no prescription RSV treatments. Check eligibility and schedule your RSV vaccine at vaxassist.com.
So where should we go next?
Sponsored by Pfizer.
You might wonder, John Legend, how do you keep your voice sounding so legendary?
Hello Joshua, Dobi, Siri here. I could not help but overhear wink wink. Lit is a very cool and hip word.
Shot when getting your flu shot if you're due for both, as recommended by the CDC.
The fresher, the better.
Ask your healthcare provider about getting this season's COVID-19 shot when getting your flu shot.
Sponsored by Pfizer.
This is the Bloomberg Money Minute. Just minutes ago, ahead of Wall Street's closing bell, and stocks are on track to end this day higher. That's after a slight rise in inflation at the wholesale level last month is bolstering expectations of a Federal Reserve rate cut at its meeting next week. And right now, the Dow is up 0.5%, over 41,000 again. The NASDAQ up 1%, and the S&P 500 up 0.75%. More couples are getting engaged, sending shares of Signet, the owner of Jared, Zales, Blue Nile, K Jewelers, and other chains up 12%. But shares of COVID-19 vaccine maker Moderna down 11%, announcing plans to slash its research and development budget by 20%. That's to save money after vaccine demand took a nosedive. And McDonald's extending that $5 summer meal deal into December in most markets across the U.S. It wants to lure in more customers and prove that it's more affordable than a lot of its competitors. Tom Busby, Bloomberg Radio.
Call now to speak with certified financial planner Joshua Dobi at 844-STUDIO-4. It's dollars and cents on 105.9, 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here. Second half of today's show, Football Reference. Appreciate you hanging with us here as we're giving attention to all things economic, financial. We were talking about just as we were going to break there. And I don't mean to dwell on the negative. I do feel like I do that sometimes, maybe because those kinds of things are the things that kind of splash across our news and our radar screen there when we're looking at things, companies that have hit Chapter 11 bankruptcy. I got to bring up one more, and it doesn't have anything to do with the food end of things. We'll talk food later. But when I'm looking at the kinds of companies that are coming across my radar screen, I got to mention this one. And I say it because maybe it's not as ubiquitous as a Red Lobster, but I definitely have to mention them. That's Big Lots. Now, I don't know if producer Bill, you've heard of Big Lots. You've been in Big Lots.
I've definitely seen my fair share of Big Lots.
Okay.
Yes.
Because I have to say that, especially at certain points in life, I may have made most of my retail purchases at a Big Lots or two or three or more. And unfortunately, also hit the Chapter 11 radar. But this one, let me say it this way, a little bit seemed a little bit structured to me. When I say it's structured, I mean they didn't come into Chapter 11 necessarily without a plan, because there was sometimes what we call a stalking horse bidder for Big Lots. When I say stalking horse bidder, what that basically means is as soon as they filed, there was somebody who was ready to buy them out of bankruptcy. And that happens sometimes. Sometimes, the movement into Chapter 11 is a very, very strategic plan. And it's done almost at the prompting of the bidder who's going to buy them out of bankruptcy, and that seems like what we saw here. Nexus Group, Nexus is out of Columbus, Ohio. Big in coming in on these kinds of things. This is not the first time. This is not their first plan that they've done this kind of thing, and they came in and bought it all up. Or excuse me, they extended a bid. So there is still possibility for another bidder at this point to come in per bankruptcy law, to come in and to make a bid. Doesn't look likely. Looks like they set it up in ways in which it would be hard for another bidder to come in and actually make real money on it. So, but very interesting. Big Lots went into bankruptcy. This group's going to come in and do some restructuring, probably, especially, let me say, almost certainly with regards to their debt and also their overhead, and bring them out. Fewer locations, fewer or probably less in inventory to be able to get them back to profitability. So that's what it looks like at this point. But very interesting, big name. That I mean, again, if you're like me, I'm certain actually that I furnished a couple, maybe several apartments with exclusive purchases from Big Lots. So I'm very familiar with them in terms of that. Let's keep going on the academic end of things for a little bit here. Got to give you this kind of stuff, right? I mean, this is the important stuff. We've got the Federal Reserve probably coming up here in next week. I have to say probably because nothing is real until it's real. Probably next week is going to begin an interest rate cut season. And I say that because very rarely, whether it's on the increase or on the decrease with regards to interest rates, does the Federal Reserve move in singular motions, meaning with just one rate cut or one rate increase. It seems like they're going to be starting here in September. Now, the market's got the idea, I'll be talking about this more in the fourth quarter as well, the fourth quarter of today's show, rather, that the market got the idea that, let's say 2 weeks ago, that the Federal Reserve might decrease rates by 50 basis points. Overdone, in my opinion. No way that they were going to do that outside of some kind of economic cataclysmic event. Definitely hasn't happened. We're not there. I mean, very, very rarely. I told you the last time they did that was 4 years ago, and that was at the front end of the pandemic. So very, very unusual for them to do that. We're not there. The market wanted it, didn't get it, market sold off. And that's really what we saw here last week when the market, specifically as measured by the S&P 500 index, went down about 4% in a week. But we're going to get there. We're going to get their meeting next week. We're going to get very likely a 25 basis point cut next week. But we came out with some supporting data that probably is pushing in that direction that will support them in terms of what they're going to do. And you can probably see by my body language here, if you happen to be watching on the WSIC app, which, by the way, if you don't have that, jump on over to the Google store or the Apple store, pick up the WSIC app. I love that. When you're outside of the radio frequency, you can just jump on the app. Doesn't matter where you are. You're running through the airport like I am a lot of the time. Jump on the app. You get the lot. Not only do you get the audio, you get the visual. Now, you may not want that for this show, but you also get the visual if you'd like to check in here and see what's going on. But a great way to stay connected to us here on WSIC, so make sure that you do that. But in looking at where the Federal Reserve is probably going to be going with this, it's going to be 25 basis points. And when we look at it from an historical context, that's the right thing to do. Now, again, if you're looking at me from a body language standpoint, no, I'm not in favor of it. That's not something that I think that the Federal Reserve should be doing at this point. I don't think that there is enough data to substantiate that. There are always other factors involved with it and reasons why they may be moving in that direction. But we did get inflation data. We got it down 2.5 year over year. That was just this week. We got 2.5% on inflation data as measured by CPI, or Consumer Price Index. That's the smallest gain since we've had in 2021. It's a good thing, right? I mean, especially when we're looking at it overall. Now, that is an average of things. So if you're looking at the grocery store, you're looking at the gas, or let me say the grocery store specifically, you're looking at it going, boy, it doesn't really feel like 2.5% here. I can't disagree with you because you're right. That's certainly the case. It certainly has been much higher in the grocery store. Other areas, though, where it's been looking, and I also have to say housing, but a lot more than 2.5% here year over year. But in other areas, it has been more modest, and that's how they come to that average. So when we're looking at where the Federal Reserve is going to be here next week, we're probably going to get 25 basis point cut. And based on historical kinds of movements, that's not going to be the last cut that they do. Now, what does that mean for November and December? I promise you, as soon as the data comes out from, or as soon as the announcement gets made, from the Federal Reserve, we're going to have rampant market speculation on what they're going to do in their November and December meetings. Now, you may be saying, sidebar, what about October? They do not meet for a scheduled meeting in October. It's November and December where they're going to be meeting next, and there's going to be rampant speculation on that end of things about what they're going to do there. That's going to be big. It's going to be big in terms of what that means materially for folks as far as interest rates are concerned. This is why I'm really bringing this up. So what does this mean for you? When the Federal Reserve cuts rates, what does this mean for you? Well, I'm going to give you a bad, maybe undesirable answer up front, and saying that when they first make this cut of 25 basis points, which is anticipated for next week at this point, unfortunately, you're not going to see much benefit at all. Meaning, when I say benefit, you're not going to see much change at all. Remember, we're talking about 0.25%. And there is a trickle-down effect. It is not one-to-one, nor is it directly correlated to other interest rates. There is relationship, but it is not directly correlated to other interest rates. When we're talking about auto loans, mortgage rates, lines of credit, all of those go CDs, money market accounts, et cetera. So when we're looking at that, you say, well, that means that mortgage is going to be cheaper. I would say from a market standpoint, mortgages have already priced this in. We've seen a tone down from the highs in the, let's call it the 7.5 range on the residential end of things, to high sixes, mid sixes at this point on the residential mortgage end of things. I think we've already seen it. I think the market is already pricing it in. I don't know that we're going to see materially any significant difference here as the Federal Reserve starts their rate cut cycle here as anticipated this coming week. So I'm saying that so that you don't get your expectations inappropriately elevated for what the material effects are going to be from actually having an interest rate cut. Because, I mean, I have this conversation all the time. I was buying CDs this morning for a client, and we do this very nearly every day for clients in different shapes, sizes, and varieties as we're looking at that. I've seen the changes in interest rates on CDs for the last 6 weeks, with anticipation that the Federal Reserve is going to be cutting this coming week, meaning that the rates have come down in the secondary CD trading market. So when I'm saying that, again, not to get too granular on you, but to give you some, let's call it context for what's going to be happening here next week, that's very, very important to keep in mind. Because sometimes folks have unnatural expectations about what's going to happen as the Federal Reserve cuts rates. Now, if we get a cut in November and or December, yes, I think you will begin to materially see some differences in terms of the rates that are offered in ways which are meaningful and impactful to you. Now, that will only have effect if you are taking out a new loan, if you're taking out a new mortgage, if you're taking out, looking at auto rates, if you're looking at a line of credit or things like that. That's really where you're going to be able to see that. Or if you have something that's variable in terms of the rate on which you're paying right now. Credit cards probably not going to come too much down. So if you're carrying a balance on a credit card, it may come down a little bit, but probably not enough to make a material impact on you. But when you're looking at, let's say, you have a variable rate line of credit, and you have one that's floating within a certain range, you get 2 or 3 rate cuts. Yeah, you're probably going to see something that actually has material difference in terms of how it's going together. So it's going to be something we're watching. We're going to keep talking about it here. Very, very material in terms of how it impacts you. But I want to make sure that you have the right expectation, because sometimes we get too far ahead of ourselves. We want things to happen all at once. I get it. All right, we're going to take a break here as we hear from our sponsors one more time. Hold with us here on Dollars and Cents here on WSIC.
We'll have more of Dollars and Cents with certified financial planner Joshua Dobi following these brief messages on 105.9 100.7 WSIC.
The clouds continue to thicken up as we work through the rest of our Thursday evening, especially once we get into the overnight hours with a sprinkle or a stray shower possible. We'll fall down into the low and mid-60s in the overnight hours for our Friday. It's a mostly cloudy day. Not to say there could be a few peaks of sun here and there, but do bank on the occasional shower from time to time and scattered showers possible heading into our Saturday. That's your forecast from the WSIC Weather Center. I'm meteorologist Chase Myers.
Here is your WSIC community calendar. Langtree Live in Mooresville presents Fortune 5 in concert on Thursday, September 12th. Fortune 5 won the Battle of the Bands this past spring and now makes their debut on the Langtree stage. Event time is 6:30 p.m. with music powered by Waves Entertainment starting at 7. Grab your friends, family, and lawn chairs. Enjoy the shopping and dining options while at Langtree. Don't miss the music of Fortune 5 this Thursday at Langtree Live. This Friday is the next edition of the Piedmont Healthcare Friday After 5 concert series. Downtown Statesville offers free entertainment to residents, neighbors, and visitors. This week's concert features the Camel City Yacht Club, 5 musicians devoted to bringing the finest smooth rock of the 70s and 80s to you. Friday After 5 is held in downtown Statesville on West Broad Street in front of Mitchell Community College from 6 p.m. to 8:30. Beer, wine, soft drinks, and food will be available for purchase beginning at 5 p.m. Bring your chairs and enjoy a night of music this Friday in downtown Statesville. The WSIC gang is back at Micaiah's in Mooresville for Trivia Night Tuesday, September 17th. Grab your squad, form your team, or come play solo and join WSIC on-air personalities as we gather for a fun game of trivia. We'll see you September 17th at Micaiah's in Mooresville. The NHRA returns to ZMAX Dragway September 20th through the 22nd for the Carolina Nationals. When the temperature cools down, the excitement heats up at the Bellagio of drag strips. Every ticket is a pit pass, giving fans unmatched access to the drivers and crews who power the NHRA's thunderous 11,000 horsepower machines to their limits. Visit CharlotteMotorspeedway.com for information, tickets, and details. To keep up with all the events happening around the community and much more, including amazing local deals, download the WSIC News app today.
Dollars and Cents continues now. Here's your host, certified financial planner Joshua Dobi on 105.9 100.7 WSIC.
Hello and welcome back to Dollars and Cents presented by North Main Financial. I'm your host, Joshua Dobi. Thank you so much for hanging with us here into the fourth quarter. Football Reference, 11 minutes and 55 seconds until you get to the 5 o'clock bell. Appreciate you spending that time with us here as we're talking about all things economic and financial. And I got to give you the academic stuff periodically, right? We got to get into rates. We got to get into the Federal Reserve. We got to get into inflation. And I mean, that's important. I know that's why you're here. We're going to talk markets here in a few minutes. I promise. I know I always save it to the fourth quarter of each show here. But we also talk about some fun stuff, at least what I hope is some fun stuff here. So you know what we're going to talk about next. Food. I do. That's one of my favorite parts on this show. Maybe not my absolute favorite part, but I do love talking about food on here. If you have ever been to Disney publicly traded company, ticker symbol David Indigo Sam DIS, not a recommendation to buy, sell, or hold Disney, but they have at their Epcot. So, producer Bill, I don't know if you've ever been to the Epcot.
It's been many years, but yes, I have.
Yeah, and I have younger daughters. Lachlan will take you there at a certain point, but they have. And I have been there for this, and it is amazing. Actually, I went there unintentionally. I mean, I just happened to be there when this was happening. Epcot has their Food and Wine Festival. Oh my gosh!
Oh wow!
I mean, if you're not familiar with Epcot at Disney, it is literally like walking through the world. They have
right? Yes.
Yeah, they have different countries, and they all have different restaurants with different food possibilities, food and drink possibilities, which of course is what's most important to me. But they then take it up a significant level with this Food and Wine Festival.
I like this.
I mean, literally, and I'm just going to literally use the words right off of the marketing material. Everything from pickle milkshakes to Carolina Reaper chicken wings.
Oh,
I'm not a big fan of pickle milkshakes, so I'm gonna toss that out there. And Carolina Reaper chicken wings. Well, I love all things Carolina. Things that say Reaper in them, especially next to chicken wings. I love hot, but that.
I do want to enjoy myself a little bit.
If you're invoking death, I don't think I'm going to hop right into that. But anyhow, I mean, just an amazing experience I mean, when you talk about the food and drink possibilities there, just unbelievable. And that's happening right now. So I think that's, again, not encouraging to go to Disney, as we talked about a couple of weeks ago. Most folks go to Disney, go into debt. That's not a good thing for that. But in terms of if you're already going to be there, maybe take a little look over at Epcot and see what they're doing over there. In addition to that, they have their Hoop De Doo musical review. Now, this is not a seasonal kind of thing. I just found this out. So over at the Fort Wilderness area of things in Disney, the Hoop De Doo musical review, and you'll understand. So I'm not particularly educated on that, except what came across my screen here. On a daily basis. So for this musical review, they're doing musical presentations, performances, and it includes it's like dinner and a show kind of idea.
Okay.
Right? So it's not just this performance, but it's dinner and a show and food and drink and those kinds of things on a daily basis. This is what caught my eye: 900 pounds of fried chicken served. Now, I am not an expert in fried. Now, I might be a little bit of an expert in fried chicken. Let's say I've had my share of fried chicken through the years. Maybe more than my share, maybe your share, maybe your friend's share, maybe your family's share I've had through the years. 900 pounds of fried chicken in a day? I mean, I don't care how many people you're shoving through. I mean, where do you go after that?
Right.
I mean, if I have, I mean, let's just say I have a pound of fried
I
chicken.
feel like my skin is getting oily just thinking about it.
I mean, if I have a pound of fried chicken, I just want to take a nap. I'm not listening to a music review. I just want to take a nap. I mean, you put a cold beer on top of that, and I literally just call me tomorrow, kind of thing. 900 pounds of fried chicken a day. Amazing. I love fried chicken too. All right, let's keep going here. Markets. What are we seeing out there right now? Interesting. I don't think I have to tell you, if you're looking at from the third quarter to right now in terms of market performance, it's been, and this is just my own, just very average, simple person kind of looking at things. It's a washing machine right now. It really has been. We've had some pop-ups, we've had some pop-downs, and we're pretty much within, let's say, an acceptable beta of where we were at the start of the third quarter. Last week, we had a 4% pullback as measured by the S&P 500 index. That was notable in that it was the largest pullback in the markets as measured by the S&P 500 index in 3 years. And so that was notable. We were watching that. I thought that may be the start of a little bit of a correction. And 4% in a week, that's pretty sizable. Boy, did we bounce back. Not all of it. We haven't retrieved all of it at this point, but certainly this week we've had some significant bounce back into that, especially in the more aggressive end of the market. I mean, yesterday, as of the time of this live broadcast or this recording, if you happen to listen to the podcast end of things, I mean, I was looking at things going up 6, 7, 8% in a day. And I'm not talking about small caps, penny stocks, or anything like that. I'm talking about literally $100 billion, $500 billion, $1 trillion companies moving 6, 7, and 8% literally in one day. That's unusual. And there really wasn't an impetus for it. I was looking for something. I was looking for something that was driving economic data. I think it was because things had gone down. And literally there was enough demand, there was enough of a floor underneath these more aggressive holdings, especially large cap technology companies. They were just being bought up. Very, very interesting. Very interesting when you're looking at market resilience. Very interesting when you're looking at what we can anticipate for the balance of the year. Now, we've got some headwinds. This is not a skate here. You've heard me talk about this for quite some time. And I'll admit, I'll raise my hand. I had this conversation earlier this morning as well with another party talking about what we had expected for 2024 and where we are right now. I'll raise my hand. We got into Q4 of last year. I thought this would be a flat to negative year. I really did. Really thought we would have, because 2023 was so good, coming out of a very negative 2022. So we probably oversold, not probably, we oversold in 2022. We had the reflex, the bounce back in 2023, substantial bounce back as measured by our most popular indices. Generally speaking, get some moderation in the year following when you look at it historically. And that's what I was expecting, flat to down, meaning not substantially down, just more of a technical move to the negative. Not true, folks. Look at our most popular indices. Even with what happened last week, you look at the positive movements on almost every significant sector that is measured by the Dow Jones Industrial Average, the S&P 500 here in the U.S., you're not going to see any red. I mean, you're not going to see things necessarily all at the same level. I promise you're not going to see that. You're not going to see that everything has gone up in double digits or anything like that. But just about everything in the green, sector-wise, not every company, obviously, but sector-wise, just about everything in the green. So what does that mean? What does that mean for where we are? What does that mean for what's coming next? Hard to say. Like I said, I was the one raising my hand here 10 months ago in looking at it saying, maybe you heard me. You're a listener to Dollars and Cents here. You heard me say it. I put it out there. I'm not going to run away from it. That's saying, we're kind of due. And we were then. But we certainly are now. When you're looking at it from a technical standpoint, I mean, this is just very, very technical analysis. So I'm not looking at companies. I'm not looking at us economically. I'm literally chart reading at this point. When you're looking at where we are right now, technically, we are overdue for a correction. Now, does that mean it's going to happen this week, this month, before the end of the year, sometime over the next year? You know that, folks. I can't tell you that. No way to know. Outside of some significant geopolitical kind of stimulus, that would be to the negative, or something unexpected that would happen economically. But I don't see that at this point. And so when we're looking at where we are right now, especially coupled with the economic data that has continued to spill out as the Federal Reserve has gone through their interest rate raising cycle, now looking at a cutting cycle, we haven't had a spike up in unemployment. We have moderated our inflation to the 2.5–3% range of things on an annualized basis across the board, not for everything, but across the board on an average. We have looked at 2.5% and 3%. I mean, it's a lot better than I thought it would be. I really have to say it that way. I can't describe it in any more substantive ways, in that when I looked at it historically, certainly as we started the interest rate raising cycle, I expected things were going to be much noisier, much uglier from an economic standpoint. I thought we would have companies that would be cutting staff, cutting overhead, GDP, which would slow down dramatically more than what it has at this point. We haven't seen it. Now, does that mean that it's not going to happen? No. That doesn't mean that it's not going to happen or that it can't happen. It may still be out there at this point. But to this point, where I would have expected to see it at least beginning to take shape at this time, haven't seen it so far. Very, very interesting. Very interesting. So when we look at it market-wise, and folks are saying, well, I'm waiting for these shoes to drop, or I'm waiting for the effects of these kinds of moves to happening. Remember, most of those reflections happen after they've already occurred. Meaning it's important insofar as you can, and it's hard. I know it. We do it all day, every day at North Main Financial Group. We're trying to figure out what's happening as it's happening. It's a little bit like trying to figure out where the parade is going while you're marching in the parade. I mean, I get it. Sometimes it's very, very hard to do that. But I don't see the kinds of harbingers that we often see at this point in the economic movement of things. I don't see the kinds of harbingers that we normally see. And that's been very, very interesting to observe. And so what does that mean? Does that mean that all things are great, rosy, and it's just rainbows and rose petals? No, not at all. That's not what we're saying. We still have some significant headwinds here. But in terms of the macro headwinds that we anticipated at this point, haven't seen them at this time. So as we're going into the fourth, well, we're almost there. Gosh, we're a couple weeks away for the fourth quarter, as much as that blows my mind even to say that out loud. But as we're looking at the fourth quarter then, what are the kinds of things that are on our radar screen? Well, we got the election, right? I mean, it's all things that go with the election. Not going to get political here. All things that go with the election the first week of November. By the way, there's not going to be long-term effects from that. You're going to get some big ups, big downs, based upon who wins, who loses. Those are going to be short-term kinds of effects. What I'm watching closer are the Christmas retail spending numbers, because that's going to be an indication, a large indication, as it is every year, about where the consumer is. Consumer, 2/3, 3/4 of our economy, very, very big deal. If they're confident going into that space, that's going to be an indication of some positivity. If they're more hesitant, that's also going to be an indication as well. Well, friends, I appreciate your time here. This week on Dollars and Cents, presented by North Main Financial. Come back to us next Thursday here on WSIC.
Serving you better than ever before. WSIC, Statesville, W290DK Mooresville, W264CU Statesville.